कराना है बेटा, 3 बातें करनी है, बड़ी इंपॉर्टेंट है, आपके पेपर में बार बार आती हैं। फर्स्ट, व्हाट इज द मीनिंग ऑफ फाइनेंशियल मार्केट एफिशिएंसी? एफिशिएंसी क्या होती है? मैं आपसे कहता हूँ नया मोबाइल लेते हैं तो उसमें बड़ी एफिशिएंसी होती है, कोई हैंगिंग नहीं होती, जितनी मर्जी ऐप्स खोल लो, जो बिकॉज रैम है, सब कुछ बढ़िया है। और कई बार आप धीरे धीरे देखते हैं कि उसकी एफिशिएंसी डाउन हो जाती है। इसी तरह से फाइनेंशियल मार्केट जो हम बात कर रहे हैं बेटे, फाइनेंशियल मार्केट ऑल्सो हैव एफिशिएंसी, दे ऑल्सो हैव इनएफिशिएंसी। तो हम एक हाइपोथेसिस को करेंगे, एक अजम्पशन से बेसिस में देखेंगे कि क्या फाइनेंशियल मार्केट एफिशिएंट है। अब आप मुझे बताइए फाइनेंशियल मार्केट का इनपुट क्या है और आउटपुट क्या है? बेटे फाइनेंशियल मार्केट का इनपुट इंफॉर्मेशन है, मतलब क्या जो इनपुट आ रही है, क्या वो जो इंफॉर्मेशन आ रही है, क्या वो उस फाइनेंशियल मार्केट को अफेक्ट कर सकती है? It means whether that input, whether that information can affect the financial market. If yes, तो मैं कहूंगा फाइनेंशियल मार्केट्स आर एफिशिएंट। तो आज मैंने उसी बात को समझाना है। दूसरी बात जो हम डिस्कस करेंगे, फाइनेंशियल मार्केट की एफिशिएंसी की फॉर्म्स देखेंगे। क्या बड़ी एफिशिएंट है, हाई एफिशिएंट है, मीडियम एफिशिएंट है, वीक है, सेमी स्ट्रांग है, स्ट्रांग है? तो वी विल डिस्कस द 3 स्टेट्स ऑफ मार्केट एफिशिएंसी। और लास्ट में बेटे कई बार अपॉर्चुनिटीज होती हैं लेकिन हम उनको अवेल नहीं करते क्योंकि हमारे माइंड में कुछ चल रहा होता है, उसको बोलते हैं अनोमलीज इन द फाइनेंशियल मार्केट्स। यूएसए में जनरली क्या होता है, ईयर एंड के दिसंबर के आसपास लोग कोई शेयर खरीदते नहीं, सब बेच देते हैं क्योंकि ईयर एंड हो रहा है। वो कहते हैं नए साल से नई शुरुआत करेंगे, तो कई बार वो अपॉर्चुनिटीज आती हैं उसमें कि आप शेयर्स खरीद सकते हो थे क्योंकि चीपर रेट था। Sometimes there are small firms के shares लोग कम खरीदते हैं because that company they think that there is a huge risk involved in that, so that is anomaly, that is also opportunity which you are losing। तो आज मुख्य तौर पर बेटे मैंने को 3 बातें बतानी है और बड़ा प्यारा सा मैंने लेक्चर CFA लेवल 1 में डिलीवर किया था इन रिलेशन टू दिस। बेटे उसमें तो पूरा एक चैप्टर है मार्केट एफिशिएंसी, पूरा एक चैप्टर है फॉर्म्स ऑफ मार्केट एफिशिएंसी एंड अनोमलीज इन फाइनेंशियल मार्केट्स। तो पूरा चैप्टर तो आपको करना ही नहीं है, तो मैंने थोड़ा थोड़ा सा हिस्सा काटा है और पेस्ट किया है। लेकिन उन सब चैप्टर्स में मैं बताने क्या वाला हूँ, यही 3 बातें बताऊंगा। पहली बात एफिशिएंसी की बातें करेंगे, फाइनेंशियल एफिशिएंसी, मार्केट एफिशिएंसी कि मार्केट जो है कितनी एफिशिएंट है, उस पे इंफॉर्मेशन का कितनी जल्दी असर होता है। हाउ क्विकली दैट इंफॉर्मेशन विच इज कमिंग फ्रॉम एक्सटर्नल एनवायरनमेंट कैन अफेक्ट दैट फाइनेंशियल मार्केट। इफ विद इन नो टाइम दैट कैन अफेक्ट। 1 सेकेंड में व्यूज आई कोविड-19 की, 1 सेकेंड में व्यूज आई कि अभी लॉकडाउन होगा अमेरिका में और फाइनेंशियल मार्केट्स नेक्स्ट सेकेंड में गिरनी स्टार्ट हो गई। सो आई विल से फाइनेंशियल मार्केट्स आर वेरी एफिशिएंट। So we will find out that in which time span, कितने पीरियड के बाद इनका इफेक्ट होता है फाइनेंशियल मार्केट में। और बेटे हर रोज नई नई इंफॉर्मेशन आ रही है। नाउ द वर्ल्ड इज फ्लैट। अमेरिका में कुछ होता है तो इंडिया की मार्केट में चेंज आता है, पाकिस्तान में कुछ होता है तो बेटे इजराइल की मार्केट में प्रॉब्लम आती है। इट मीन्स हम सब इस समय इंटरकनेक्टेड हैं, हम सब एक हैं। तो आपके घर में कुछ होगा तो मेरे को इफेक्ट होगा, अल्टीमेटली वी आर ऑल कनेक्टेड। तो आज हम उसी की बातें करेंगे। तो मैंने एक बड़ा प्यारा सा चित्र बनाया है कि भाई फाइनेंशियल मार्केट बीच में टाइप्स ऑफ फाइनेंशियल मार्केट्स हैं। अब इनको इन्फॉर्मेशन आ रही हैं, अब इन्फॉर्मेशन कितनी जल्दी इफेक्ट करती हैं, दैट एवरी मोमेंट देयर आर सम इन्फॉर्मेशंस। बेटे यूएसए का प्रेसिडेंशियल इलेक्शंस अनाउंस हो गए, सिक्योरिटी एक्सचेंज कमीशन ने नई कॉर्पोरेट लॉ की प्रोविजन स्टार्ट कर दी, कंपनी का मैनेजिंग डायरेक्टर ने सुसाइड कर ली, और कंपनी हैज स्टार्टेड विद अ न्यू प्रोजेक्ट, और कंपनी हैज डिक्लेयर्ड द डिविडेंड। ऑल दिस इज इंफॉर्मेशन। Now whether this information is affecting or not the financial markets, that is financial market efficiency। मैंने एग्जांपल के लिए लिखा है कि बेटे हर रोज कुछ ना कुछ हो रहा है, हर सेकंड कुछ ना कुछ हो रहा है, हर मोमेंट में कुछ ना कुछ हो रहा है। तो वो इंफॉर्मेशन क्या फाइनेंशियल मार्केट को अफेक्ट करेगी तो सही, लेकिन कितनी जल्दी करेगी। इफ क्विकली देन आई विल से स्ट्रॉन्ग फाइनेंशियल मार्केट. इफ थोड़ा टाइम लेती है, सेमी स्ट्रॉन्ग फाइनेंशियल मार्केट. अगर बहुत समय लेती है तो वीक फॉर्म ऑफ फाइनेंशियल मार्केट. तो फर्स्टली आई विल अंडरस्टैंड व्हाट इज एफिशिएंसी. तो मैंने एग्जांपल्स लिखे हैं. इफ दीज ऑल आर द इंफॉर्मेशन, सो हाउ दिस इफेक्ट इज देयर वो देखेंगे. तो बेटे नेक्स्ट स्टेप है. अच्छा, मैंने जो अभी लेक्चर पेस्ट किया ना बेटे, वो इंग्लिश में बोला हुआ है, क्योंकि सीएफए के सारे रिकॉर्डिंग मैंने इंग्लिश में किए. यकीन मानिए, जो जो लिखा है ना, आप प्लीज लिख लेना. बड़ा प्यार से एक्सप्लेन किया, और इवन मैंने एक केस स्टडी से एक्सप्लेन करने की कोशिश की है कि हाउ वी कैन फाइंड आउट दैट वेदर मार्केट्स आर एफिशिएंट और नॉट. बेटे वो केस स्टडी लिखना, केस स्टडी समझना, आपको ज़्यादा कंसेप्ट क्लियर होंगे. सीएमए के पास एग्जामिनेशन अगर आप देखें तो मार्केट एफिशिएंसी के ऊपर बार बार पूछा हुआ है. उसके बाद जो मैंने आपको एक्सप्लेन करने की कोशिश की है वो ये है बेटा, फॉर्म्स ऑफ मार्केट एफिशिएंसी. 3 घड़े बना दिए. वीक फॉर्म, सेमी स्ट्रॉन्ग, स्ट्रॉन्ग. और इसमें कुछ क्राइटेरियाज के बेसिस में मैंने डिसाइड किया कि वेदर दैट इज वीक, सेमी स्ट्रॉन्ग और स्ट्रॉन्ग. तो मैंने कुछ बेंचमार्क्स, कुछ टूल्स की हेल्प ली है. फंडामेंटल एनालिसिस मैं रिस्क रिटर्न में बताऊंगा यूनिट 1 में. वैसे फंडामेंटल का मतलब क्या होता है? एक लड़का है, जवान सा है, पढ़ा लिखा है, हट्टा कट्टा है, लेकिन अभी पैसे नहीं कमा पा रहा, जॉब नहीं लगी, तो मैं कहूंगा दिस पर्सन इज फंडामेंटली वेरी स्ट्रॉन्ग बट टेक्निकली वीक. टेक्निकली कुछ अलग चीज होती है, फंडामेंटली कुछ अलग होता है. रिस्क रिटर्न यूनिट 1 में मैंने आपको एक्सप्लेन करना है. तो मैंने आपको फॉर्म्स ऑफ मार्केट एक्सप्लेन किया विद द हेल्प ऑफ सो मेनी टूल्स. तो बेटा वो हम डिस्कस करेंगे. लास्ट में मैं भूपेश आनंद, बेटे एक बड़ा प्यारा सा चार्ट प्रिपेयर किया मैंने. आप वो चार्ट जरूर बनाना बेटे, चार्ट जरूर बनाना. वो वीडियो जो मैंने अटैच किया है, बड़ा ब्यूटीफुल वीडियो है. उसमें ये चार्ट बनाया कि भाई टाइप ऑफ मार्केट फॉर्म्स ये होंगी, प्राइस इफेक्ट किससे होगा, व्हाट वर्क्स, व्हाट डज नॉट वर्क. उससे आपको एक्सप्लेन करके मैंने बताने की कोशिश की है कि हाउ वी विल फाइंड आउट दैट वेदर द फॉर्म ऑफ द मार्केट इज वीक, सेमी स्ट्रॉन्ग और स्ट्रॉन्ग. लास्ट में इस वीडियो के मैंने एनॉमलीज बताने की कोशिश की है बेटे. लास्ट अटेम्प्ट में पेपर में भी आया. व्हाट आई मीन बाय एनॉमलीज, आई विल से दोज अपॉर्चुनिटीज जो मैं एज ए इन्वेस्टर ग्रैब कर सकता था बिकॉज मार्केट बियर फेज में थी, बट मैंने ड्यू टू सो मेनी अजम्पशंस नहीं ग्रैब की, उसको कहेंगे मेरी भूल है, अनॉमलीज हैं. बेटे अनॉमलीज मैंने बड़े प्यार से समझाने की कोशिश की है. नो डाउट हम 2 अनॉमलीज हमारे कोर्स में, हॉक, ग्लैम, वायलेन है, बट आपको जो मैंने क्रॉस सेक्शनल अनॉमलीज बताई है ना उस वीडियो में, आप लिखना, आप उसका फोटो बनाना, ध्यान से कंसेप्ट को समझना. मैं सही बता रहा हूं, आप अगर पूरा लेक्चर देखेंगे ना तो आपको बड़े कंसेप्ट की क्लैरिटी होगी. जो वीडियो अटैच कर रहा हूं इंग्लिश में है, आपको समझना है, लिखना है, ईमानदारी से बेटे करना है. मार्केट एफिशिएंसी, मार्केट एफिशिएंसी. So if I break this word into 2 parts, one is market and second is efficiency. Now what is efficiency? Efficiency is efficiency. What is the literal meaning of efficiency? If this motor is working efficiently, properly, it means if all the things are doing properly, it means what is to be done, when it is to be done, how it is to be done, it is automatically doing all the things. I will say that is named as efficiently. If you are studying properly, it means you are efficiently studying it. Now what is the meaning of market efficiency? These are the 2 words, and within these 2 words we will be discussing 7 learning outcomes. That what is the meaning of market efficiency and how it is helpful, for the investment practitioners, that why they should be aware of that market should be efficient, because they should be aware of what is the meaning of market efficiency. Second, what is the difference between market value and intrinsic value? Why there is a difference in the market value and intrinsic value, and whether there will be a difference in market value and intrinsic value in all the forms of market. Now what I mean by forms: weak form, semi-strong form, strong form. There can be different forms of the market. Weak form, semi-strong form, strong form. All these are the types of forms of efficiency. So my dear friends, most important lecture, and we will be connecting all the dots. We will be connecting all the dots in that, and the first dot will be what is happening actually in the market. When I say market, it means all the demand and supply. It is affected by the demand and supply. This is demand and this is supply, and the price is being determined on the basis of demand and supply, which we are already aware of. Now, the point is why demand is being increased. Why a particular security, for McDonald's, for General Motors, for Apollo Tires, for Ranbaxy, why the demand is being increased. If I take a scenario that demand is more than supply, I mean that prices will increase. Now, the point is why demand will increase. It can be due to so many factors. It can be due to EPS, it can be due to promoter's track record, it can be due to taxation factors, it can be due to regulatory factors, it can be due to so many reasons. It means due to positive information, a demand of a security increases, and due to negative information, the demand of a security reduces. Now the point is whether due to positive information demand is increases, and whether by negative information I mean that demand will decrease. Now what about this information? From there, where this information is coming, this information is coming, and whether this information, let it be positive or let it be negative, directly impacting whether this information is directly impacting the market, whether this information is directly impacting the market, that is also very important. If this information of a company, if this forecasted figures of a company, or any information, whether let it be public or private, any information, if it affects very fast, very quickly, and it affects the market, we will say the markets are efficient. And in case not directly affects, it affects, or the market prices absorb that information after a time interval, I will say those markets are not efficient, they will be inefficient. So in this reading, what we will be focusing on, that what is the meaning of market efficiency, how quickly the information acts, how quickly the information is being absorbed by the market, and how quickly the prices of those securities are being varied by with the help of that information, and whether that information is full, whether that information is quick, or how that information is affecting it. So we will be discussing all those concepts in this reading, and there are 7 learning outcomes, and we will be discussing weak form, semi-strong form, strong form, fundamental analysis, technical analysis. Then we will be discussing with the anomalies and behavior finance, and with relation to anomalies. So let's start with the chapter. Let's start with the reading. Informationally efficient capital market. I hope spellings are correct. In an informationally, it means a market which information is absorbed quickly. That is informationally efficient capital market. So what are the features of an informationally efficient capital market? So I am writing down first point. In an informationally efficient capital market, security prices reflect the price of a security, the price of McDonald's share, the price of Apollo Tire share, the price of Fevicol Pidilite share, the price of security of Dabur, the price of Patanjali, that reflect all available information. All the available information which is there in the universe, that is, if the market prices are affected by all the available information, that is named as efficient market. But it should be fully, the information, all available information, full information, quickly and rationally. Fully, quickly and rationally. Fully, quickly and rationally. It means I will say that market is an efficient market. So in an informationally efficient capital market, in an informationally efficient capital market, in an informationally efficient capital market, security prices reflect all available information fully, quickly, and rationally. That is named as a efficient capital market. So hence it is difficult to beat the market. Now what is the meaning of beating the market? It means if the market return is 15% and you are getting a 17%, it means it is named as beating the market. But in case of efficient markets, you cannot beat the market consistently. It means it can be there in exception case that you can earn more return as compared to the market, but it will not be always. There will not be consistency in that. So that it means you cannot beat the market consistently if the market is efficient, because market has automatically already absorbed full information quickly and rationally. So the point is that is named as efficient capital market. And I want to discuss a case study for finding out whether the market is efficient or not. Now, how to find out that market is efficient or not? Suppose I am assuming that market price of a security is $100. Suppose the market price of a security is $100, and at T0, and supposedly a new information, entire financial reports have come up, or all the full information has come up, and within seconds, because of that positive information, because there is an increase in EPS, there is an increase in profits, after few seconds this $100 per share shoot up to 130 per dollar or $140 per share. Now in this case I will say that this information is positive and the markets are efficient because it has affected quickly. So the word is quickly and fully and rationally. Fully, quickly, rationally. So please write down the second point. And after that information, prices will increase from 100 to $130. And after that information, prices will increase from $100 to $130 in seconds. So I will say this type of market is efficient market, as market prices quickly absorb the new information. But in case after that information, market take some time, supposedly it takes some time, let it be 1 month to increase the share price from $100 to 130. So I will not say the markets are efficient, they are inefficient markets. So I can get an idea that whether the markets are efficient or inefficient with the help of how quickly the markets are responding to that information. Please write down the case study which tells me, or which put a demarcation line that whether markets are efficient or not efficient. Now I want to say something very important for you, and this is highly testable third point. Please put a star in this. Please put a star. In case of efficient markets, I have told you we cannot beat the market consistently, and there is one more important point. In case of efficient market, only unexpected information, the information which is unexpected, the information which is expected has already been absorbed. I will tell you with the help of a McDonald case study that what is the meaning of expected information and what is the meaning of unexpected information. I said only unexpected information should elicit a response from traders. Now what is the meaning of this? Only unexpected information should elicit a response from traders. It means if the information is expected, then it will not affect the response. The trader response will not be affected. But if it is unexpected, for example, I want to just uh, show you one Nasdaq. McDonald's financials. Let it be like this. Now, McDonald's, one security is 162.55 selling at this as in Nasdaq, and there is an increase of 0.57% by 92 paisa, by $92. Now, if I see the income statement of McDonald's for 2017, 16, 15, 14, and if I see that total revenue is this much, 22, 820, 422, 820, 400, and in last year 24, 62 this. Now if I see, and in 2015, 25, 30, 25, 41, 30, it means just see the trend, trend is declining. Now, if it is already expected that the trend will decline, then traders will not have a response because that information has already been absorbed in the market. But if we are expecting a downward trend in say 17 as compared to 16, but automatically the price, but the total sales has increased. Now it is unexpected information because it is not being expected. Now this type of information which is unexpected, it will give a response from the traders in efficient markets, because in efficient markets even the expected information has already been absorbed. Or just see cost of revenue, or if I go for this profit, let it be like this, monthly interest and all, net income, let me see net income. Now then this, just see net income, in there is a higher trend of net income. No doubt sales are being decreasing, total revenue is being decreasing trend, but profit is at increasing trend. Now this information, if this is already expected that profit will increase even if sales are decreasing, then it has already been absorbed and there will be no effect in the prices. But in case there is no expectation of that and there is a sudden increase in profits, it will have only effect and then traders will react to that. It means only in efficient markets, only the unexpected information has the effect. So I hope you must have uh, got an idea that what I want to say. So I have shown you third point, I have shown you fourth point, fifth point. Now which type of strategy we should follow? Now you see there are two types of strategies, active strategy and passive strategy. When I say active strategy, I mean which securities to be purchased, when it is to be purchased, when it is to be sold, how much should be purchased. That depends upon the portfolio manager or the investor. That type of strategy is named as active strategy. But in case I am not deciding myself, I am just replicating the index, S&P 500, Nifty 50, Sensex 30. I am just investing in the same weights and in the same securities as this index is doing. It is named as passive strategy. Now the point is whether in case of efficient markets, whether we should go for active strategy or we should go for passive strategy. Just think it. I think you must be writing down all this. Please write down. Please write down and sit straight. In case markets are active, in case you are going for in case markets are efficient and you are going in an active strategy, I have already told you, you will not able to beat the market consistently. It means being active, it will involve a cost because you have to find out which securities are undervalued and which securities are overvalued. But market is efficient. All the securities are maximum correctly priced. So it will waste your time and it will incur so much cost. So it is better in case of efficient markets. I repeat, it is better in case of efficient markets. It is better in case of efficient markets. You should follow passive investment strategy because it will save your cost of detecting the type of security, that whether they are overpriced or underpriced. So the point is, please write on fifth point, can decide which security is to be invested, how much to be invested, and where to be invested. And in case passive strategy is there, to invest in same proportion of index. So it is better to invest to go for passive strategy as compared to active strategy. Last point of this today's lecture is, in case market is efficient, your securities will be correctly priced. They will neither be undervalued nor overvalued. neither undervalued nor overvalued. And I have told you already in portfolio management what is the meaning of overvalued and undervalued. So in case of efficient market, there are so many features that you should go for passive strategy, because you cannot beat the market consistently, and also because all the securities are neither undervalued nor overvalued, they will be correctly priced. So undervalued active investment strategies cannot earn active active strategies cannot earn positive risk adjusted returns consistently. I am again repeating the word consistently. And also the cost in relation to selection of securities can be saved. Hence, it is better to go for passive strategy. So this is lecture number 1. We have started market efficiency. In today's lecture, we have discussed what is the meaning of market efficiency and how it will be helpful to an investment practitioner like you. That is, what are the different forms of efficiency market? What are the different forms of inefficiency? Weak form. What is a weak form? What is semi-strong form? And what is strong form? So we will be discussing these forms and the features of these. Now this category of markets, that market as per this hypothesis, Eugene Pharma, I will be telling you a person name who has invented this, that market efficiency can be divided into three parts. Market efficiency can be divided into three parts. One is weak form, second is semi-strong form, and third is strong form. So these are the three forms on the basis of which market efficiency has been divided, and the hypothesis was this propounded by Eugene Fama, a Nobel Prize winner. We will see who is Eugene Fama and all that. So please take out your registers. Register number. This lecture is most important because in this I will be telling you that what was there in the research paper by Eugene Pharma, and then we will be discussing the different forms of market. Now, before we come to that form of market, just I want to have an idea that the prices of a security are maximum. They are only affected by demand of that security and supply of that security. Now, if demand is more and supply is less, the market price will increase. Similarly, if demand minimizes and supply is same, the market price, decreases. Now, the point is, what are those factors with the help of which demand can be affected? What are those factors which can affect the demand? Why a particular security people are they are motivated to buy it? Why it is so? It can be due to so many reasons. There are different reasons. Numerous lakhs of variables can be there. But the point is, in today's lecture we will be discussing three or four major factors which will help to create a demand. That first factor is that already how much was the business, that is what is the existing price and volume of transactions, that what is the price at which that security is being purchased and sold, and existing price, and how much is the number of units which are being traded daily. So price and volume is the most important factor which affect demand, and it indirectly affect the price. So demand is affected by thousands and lakhs of variables. So we will be discussing with 4 or 5 variables, and then we will be watching that in which form which variable works. And second, price and volume. Along with that price and volume, I can say the public information. Public information also plays a very important role in affecting the demand of a securities. For example, financials, the interim financials, or there is a sudden invention of gas and oil by Reliance, or different. So this information which is public, that if that is positive, it will affect demand, it will increase demand. And if this information that is public is negative, that will again affect the demand. So the point is we are discussing that price and existing volume of transactions affect the price of a security. Also, Also the public information also it plays a very important role. Then I'm coming to private information. Private information, that information which is not public, which is private, that for example board of directors have decided to resolve, or they have resolved to come up with a right issue, or they want to declare dividend, or they want to go for bonus shares, or they want to go for stock split. That is a private information. It will take some time to become public. Now this information also affects this can be named as insider trading. This also affects the demand of a security, and consequently it affects the price. Now along with that I will say fundamental analysis. If I say fundamental analysis, I will be discussing in detail in the later outcomes, in the later readings. Now what is fundamental analysis? If I say Mr. Ram is healthy, he is very hardworking, and he solves each and every question, practical problems of CFA curriculum. Now, in this case, I will say that there is a huge probability that he will get success in the coming examination because he is fundamentally very strong. He is healthy. He is positive thinker. Along with that, he is doing practice daily, and he is solving the questions with the logic. And he has tried the CFA curriculum, practical problems, mock examinations, and all that. But I will say this is a fundamentally he is very strong. Similarly is the case with any security. If promoters are good, if they are doing good, if their track record is good, if I say EPACE is good, their competitors, they have the less competitors, taxation policy is very favorable to them. So I will say they have a good fundamental analysis. Now fundamental analysis, it involves 3 points: economic analysis, industry analysis, and company analysis. We will be discussing in detail what is the meaning of economic analysis, industry analysis, and company analysis. But the point is, I will say the demand is affected by different reasons. One is price and volume, existing price and volume. Second is public information. Third is private information. Fourth is the fundamental analysis factors, that what are the fundamental factors in relation to that security. And the last is technical analysis. We have already discussed in economics that what is the meaning of technical analysis. When we draw head and shoulder patterns, there are different patterns for that. And when we have different, so that graph, that statistics which we are using, that is named as technical analysis. So basically, these are the 5 factors which affect the demand of a security, and with the help of which there is a change or the variation in the prices. So the point is, now we will see that if these 5 factors affect if they have an effect in price in markets. So we will have 3 markets as per Jugain Pharma. The first market will be named as weak form. Weak form. The second market will be named as semi-strong, 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 and the third type of market will be named as strong market. Strong market. So these are the 3 types of markets which are there. Now, how we will find out that this is weak, or this is semi-strong, or this is strong? So we will see these features, that if price and volume works, if fundamental works, fundamental analysis works, or whether public information is working, or whether private is working or not, whether technical analysis is working or not. So on the basis of these 5 factors, whether they are working or not, that we can determine that the market is weak, semi-strong, or strong. And then on the basis of that, we can have a strategies, we can have 2 strategies: active strategy and passive strategy. Now in case of weak form, it is better to have active strategy, and in case of semi-strong and strong form, it is better to have passive strategy, which we have already discussed in lecture number 1, that which type of strategy should be there in the efficient market and in case of inefficient market. Because in case of semi-strong and strong market, the market information is easily absorbed in the prices. It is easily factored in the market prices. So there is no benefit in having an active strategy in these types of markets. As Jugain Pharma in Stockholm, December 2013. This person has invented, as per his research paper, as per his hypothesis, that markets can be divided into 3 categories. One is weak form, second is semi-strong, and third is strong form. So nationality American, he is an American. He did institution related with University of Chicago and School of Tradition, and all different. He has different types of awards, even being Nobel awards are being given to him. Now what is What are the different, what are the inventions? Efficient market hypothesis. Efficient market hypothesis, and in that he has discussed former French three-factor model. Former French three-factor model. The point is that we will be doing with this research paper, and also this let's see weak form, semi-strong form, and strong form of hypothesis. Now, what is weak form? When I say weak form, just have a look. We will be writing down, but still have a look. The weak form implies that market is efficient. The weak form that the market is efficient, reflecting all market information. But this hypothesis assumes that the rate of return on the market should be independent. Past rate of return have no effect. It means no effect of technical analysis. Given this assumption, rules such as one trader has to buy this is invalid. Okay, so these are the three different forms of market. So let's start with the journey, and let's write down lecture number 4, learning outcome number D plus E, contrast weak form, semi-strong form, and strong form. So the first point which we will be going to write is separate forms of market inefficiency. So there are, as per Joaquin Farmer, there are 3 types of market inefficiency. One is weak form, second is semi-strong form, and third is strong form. Now this is very testable area, and I am telling you that if you will be able to write on the table which I have prepared in third or fourth slide, all the questions you will be able to solve it. And in all that table you will see that what is the common point, then we will see how to learn that with the logic. So the first point, you please write down my dear friends, please take out your registers. Separate forms of market efficiency. There are 3 separate forms of market inefficiency. One is weak form, second is semi-strong, third is strong. And the whole idea of classification, this classification in different markets being invented by Eugene Pharma through his research paper, these hypotheses. We have seen the image of Eugene Pharma. Now the most important part which I am going to tell of today's lecture is this chart, this table. Now you have to prepare this table as it is, and then I will be explaining you this table, that what is the meaning of this, what is the meaning of this, what is the meaning of this. So third point is, following is the table which shows features of 3 types of market inefficiencies. I repeat, following is the table. Following is the table. Now this is the table which summarizes all the features of 3 types of markets. So please prepare table in this form only. Have 4 columns. First column is type of market. Second is prices reflect. It means the prices which are there in the market, in the stock market, in the stock exchange, they reflect which things. Now we have discussed that 5 points are very important. Price and volume, existing price and volume, public information, private information, technical analysis, fundamental analysis. These are the 5 points we will be taking into care of while defining these markets. Second column is prices reflect. Third column is what works. What works? That in this type of market, what works and what does not work. That what does not work in these types of markets. The first form is weak form. Weak form. And let me tell you that whether it is a weak form, whether it is a semi-strong form, or whether it is a strong form, existing prices and existing volume do affect, have the effect, so prices reflect. So it means the new prices are no doubt affected by existing price and existing volume, whether it is a weak form, whether it is semi-strong form, or whether it is strong form. So types of market, first is weak form, prices reflect price and volume, what works. Fundamental analysis, and I have told you a brief idea about fundamental analysis. No doubt we'll be discussing in detail in coming readings. But when I say fundamental analysis, it means economic analysis, it means industry analysis, it means company analysis. So types of market, weak form, prices reflect price and volume, what works, fundamental analysis. And insider trading, weak form, because market is not absorbing all the information. So insider trading will also work, and fundamental analysis will work, and technical analysis will not work. And you will see that whether it is weak form, whether it is semi-strong form, or whether it is strong form, in all the cases technical analysis will have no role. Technical analysis will not work. So first type of market is weak form. The second type of market is semi-strong form. semi-strong. Now existing prices and existing, volume do affect this type of the new price. That is very sure. And second is the public information, semi-strong. It means any information which is being public, financial results are public, interim financial reporting are public, any decision by management is public. That is named as public, which is available to all. So it means the prices, the new prices of the securities are affected by two: existing price and volume, and public information. What works? What works? Insider trading works. Insider trading works, and what it means, even fundamental analysis does not work here. And what does not work? Technical analysis and fundamental analysis. And the last form of market is strong form. So it means the new prices are affected by price and volume of the existing. Second is public information. Third is private information. And what works? Nothing, because this form is strong form. And what does not work? Fundamental analysis will not work. Technical will not work. And even insider trading will not work.